So today we have to start asset accounting. Asset accounting. This component is used to process the business transactions relating to assets. So here assets means fixed assets, right? So the business transactions relating to fixed assets are, right, acquisition of assets. So during the course of the business, the company codes will acquire the fixed assets like land, buildings, plant and machineries, furniture, vehicles, etc. etc. So when this type of assets are acquired, how to process them? Then sale of assets. Sometimes after the expected life of the asset is over, and sometimes the management thinks that the assets are not any more useful to the company, they will sell them. So when you sell the asset, how to process them? Then transfer of assets. Sometimes the assets will be transferred from one business area to another business area, from one department to another department within the same company code. That is called transfer of assets. So how to process the transfer of assets? Then scrapping of assets. So scrapping of assets means just like that. As in a particular date, you stop using the asset. Then that asset is transferred to scrap warehouse. That is called scrapping of assets. So when the assets are scrapped, how to process them? Then calculation of depreciation and balance sheet values. It is the main purpose of the asset accounting. See how to calculate depreciation, because from the fixed asset side, we have to calculate depreciation, and the depreciation is to be charged to for after loss account. Similarly, in the balance sheet, we have to display the fixed assets values. So at what the values these fixed assets are to be represented in the balance sheet. So the main purpose of this asset accounting is to calculate and post the depreciation and to find the values of assets to be represented in the balance sheet. So here, this asset accounting is also maintained on the principles of subsidiary ledgers. Just similar to accounts payable, account receivable, this asset accounting is also maintained on the principles of subsidiary ledgers. So this asset accounting is also integrated with the general ledger to reconciliation accounts. So we develop the configuration, right, for the calculation of depreciation and calculation of balance sheet values. During this process, we also develop the configuration for processing of acquisition of assets, sale of assets, transfer of assets, scrapping of assets, etc., right? Now, here, normally every month we prepare P&L account and balance sheet, right? So from the fixed assets account side, right, in the balance sheet, we have to display the acquisition values. And also in the P&L account, we have to charge the depreciation. So you have the 10,000 assets, for example. On all the 10,000 assets, right, we are using different methods of depreciation and different rates of depreciation. In that case, calculating and posting the depreciation on all 10,000 assets is a very big task. So it takes number of days together, right? That's why using this asset accounting component of SAP, the system will calculate and post the depreciation on 16,000 number of assets within 2 hours. That is the efficiency of this asset accounting component of SAP. So the main purpose of asset accounting is to calculate and post the depreciation, right? Then what is depreciation? It is the reduction in the value of asset during the expected useful life of the asset due to normal wear and tear. See, it is the reduction in the value of asset during the expected useful life of the asset due to normal wear and tear. Means here, basically, there are 2 types of expenditures. Number 1, revenue expenditure. So in the case of revenue expenditure, right, we get the benefit immediately, or the benefit you might have derived might have already expired. In the case of revenue expenditure, the benefit might have already expired, or the benefit you get will expire immediately. That is called revenue expenditure. So the revenue expenditure is always charged to for after loss. For example, salaries, wages, etc., etc. These are all our revenue expenditure. Number 2, capital expenditure. So in the case of capital expenditure, the benefit you derive will spread into some number of years into future. Right? See, for example, you purchase one plant and machinery. This is called revenue expenditure. You construct one building. Sorry, this is called capital expenditure. You purchased one plant and machinery. That is your capital expenditure. You construct one building. That is your capital expenditure. Right? You purchase the furniture. It's a capital expenditure. So the benefit you derive from the capital expenditure will be spreading into some number of years into future. For example, you purchase one plant and machinery today. So using that plant and machinery for next 10 years, you'll be able to produce the goods, you'll be able to sell them, and you'll be able to get the revenue. Means with the help of the plant and machinery, you'll be able to do the business for next 10 years. So the benefit you are getting from this plant and machinery acquisition value is spreading into 10 years. This is called capital expenditure. That is nothing but your fixed asset. Now, it is quite common that whenever you start using any fixed asset, it will lose some of its value. Whenever you start using any fixed asset, it will lose some of its value. For example, today you purchase one car, right, for 25 lakhs. After using for 2 years, you want to sell the existing car and you want to purchase a new car. In that case, will you be able to get the original 25 lakhs value? No, because you have used that car for 2 years, for which you have got already some benefit, right? So for that benefit, you have to pay. That's why you get some amount, which is definitely less than 25 lakhs. Let us say you have been able to sell the car for 20 lakhs. The remaining 5 lakhs is the value lost by the car due to the usage of the car. Now that loss is called revenue expenditure. That is technically called depreciation. And the depreciation is to be charged to profit and loss. And remember, the reduction in the value of asset should be caused by usage of the asset. If the reduction in the value of asset is not caused by usage of the asset, then you cannot call it as a depreciation. It's called abnormal loss. Again, the abnormal loss has to be capitalized. A part of that abnormal loss is to be written up to P&L account every year. So here, you have many methods of calculating depreciation. So according to your requirement, we can calculate the depreciation. According to your requirement, we can calculate the depreciation using any method and rate of depreciation. So whatever the method you use to calculate depreciation, what are the entries we post? Say for example, when the depreciation is calculated, depreciation account data to accumulated depreciation on asset. Accumulated depreciation asset means accumulated depreciation on respective asset. On any asset you calculate depreciation, the account debited is always depreciation account. So when you calculate depreciation on plant and machinery, the entry posted is debit depreciation account, credit accumulated depreciation on plant and machinery. When the depreciation is calculated on the buildings, right, entry posted is depreciation account data to accumulated depreciation on buildings. When you calculate depreciation furniture, depreciation account data to accumulated depreciation on furniture. Like that, the account debited is always depreciation account, but the account credited is always accumulated depreciation in respect to asset, right? Then this depreciation account is a expenditure, right? That is transferred to profit and loss account by debiting profit and loss account and crediting depreciation account. Now the depreciation account balance becomes zero, but there is a balance in the accumulated depreciation account on the asset. This amount is displayed on the liabilities of the balance sheet every year. So this balance in the accumulated depreciation will be carried forward to next year, and the next year the depreciation is added again. So every year the depreciation calculated is added to the accumulated depreciation. So in the balance sheet, the accumulated depreciation is displayed on the liabilities of the balance sheet, and also the assets are represented in the balance sheet at their original acquisition value, right? Now, in order to process all these business transactions, again, we have to create a master record for every fixed asset. So every fixed asset is identified with a number. Do one thing. Some space is here in the slide, right? Please write down. we have to maintain a master record. We have to maintain a master record for every fixed asset. We have to maintain a master record for every fixed asset in the asset accounting. The master record is identified. The master record is identified with a number. The master record is identified with a number. And the number is taken from the asset classes. The asset, and the fixed asset master record number. The fixed asset master record number is taken from the asset classes. Is taken from the asset classes. Just a minute. Now, the fixed asset master record number is taken from asset classes. The fixed asset master record number is taken from asset classes. Now, what is this asset class? What is asset class? Here, asset classes. It is the criteria for classifying the assets of the company according to management and legal requirements. See, it is the criteria for classifying the assets of the company according to the management and legal requirements. Means, for example, how you have to classify fixed assets in the balance sheet. That means in the balance sheet, under what headings? Under what headings you have to display your fixed assets. For example, land. Land is treated as one asset class. Buildings. Buildings is treated as one asset class. Plant and machinery. So it is treated as one asset class. Furniture and fixtures, one asset class. Vehicles, one asset class. Like that, you create any number of asset classes as per the balance sheet display requirements. So the main criteria we have to look into is how you have to display your fixed assets in the balance sheet. Under what headings? That many number of headings are created as asset classes, right? For example, we have 25 buildings as on today. This year, we have started constructing building number 26. As on the balance sheet date, the building number 26 was not yet completed, right? But you have invested some amount on the building up to the current phase of construction. Then that is displayed under assets and construction. So you create one asset class, assets and construction. Now, similarly, you have some patent rights, you have some goodwill. So in the balance sheet on the asset side, under what headings you display this goodwill and patent rights? Any idea for anybody? You have goodwill. Huh?
Intangible assets.
Exactly, intangible assets. So you create one asset class, intangible assets. Now, in India, right, in the Companies Act, there is one rule that if the acquisition value of any asset is less than 5,000 rupees or equal to 5,000 rupees, we can straight away write off the acquisition value as depreciation in the year of purchase. This type of assets are called low value assets, right? So you create another asset class, low value assets. Like that, we can create any number of asset classes. Now, the asset master records are created under the respective asset classes. Means, suppose if you have 10 lands, the 10 land master records are created under the land class. You have 25 buildings. So the master records for all the 25 buildings are created under the buildings class. Then you have 30 plant and machineries. And the master records for all the 30 plant and machineries are created under the plant. Sorry? Okay. So the master records for all the 30 plant and machineries are created under the plant and machinery class and so on. Now, every asset master record is identified with a number. That's why for every asset class, we assign the number range. Say, for example, first we create the number ranges. Before creating the asset classes, we define the number ranges. For the number range number 0, 1, right? We link number range value 1 to 1 lakh. For the number range number 0, 2, we link number range interval 1 lakh 1 to 2 lakhs. For the number range number 0, 3, we link 2 lakh 1 to 3 lakhs. For the number range number 0, 4, we link 3 lakh 1 to 4 lakhs and so on. Now, when you create the master record for the first land under the land class, the system will take the number 1, second land number 2, third land number 3. When you create the master record for the first building under the buildings class, the system will take the number 1 lakh 1. Second building 1 lakh 2, third building 1 lakh and so on. Say for example, our company is a construction business, right? So we have one plant and machinery, crane. You know, crane is an equipment which is used to lift heavy weights, right? So the crane is the plant and machinery for us. So its master record is created under the plant and machinery class. Then the system will take one number, 2 lakh 1. In addition to 2 lakh 1, the system will assign another number that is, for example, 0. This is called main asset. So every asset master record is identified with a sub-asset number and main asset number. So whenever you see 0 in the place of sub-asset number, that is called main asset. So the master record for the main asset, crane or plant and machinery, is given with the number 2 lakh 1 0. So when you have the main asset, there comes the question of sub-asset. What is sub-asset? For example, we have a generator, right? The generator is exclusively used for the purpose of the crane. The generator is exclusively used for the purpose of the crane. So the generator is fitted on the platform of the crane, and wherever the crane moves, the generator also moves, right? In that case, the generator is called sub-asset for the main asset crane. So when you create the master record for the generator, the system will take the number 2 lakh 1 1. Then we have a toolkit. The toolkit is also exclusively used for the purpose of the crane. In that case, when you create the toolkit is called sub-asset, right? So when you create the master record for the sub-asset toolkit, the system will take the number 2 lakh 1 2. So under one main asset, you can create up to 9,999 sub-assets. Clear? So how the system understands whether the asset we are creating is a sub-asset or main asset? For that, the system differentiates the transaction codes, and also the main asset master records are created with reference to asset class. Means in the screen where we create the master record for main asset, right? The system will ask you to enter the asset class. And the transaction codes are different. The screens are different to create main asset master records and sub-asset master records. Then the sub-asset master records are created with reference to main asset master record, right? Means in the screen where we create the master record for sub-asset, the system will ask to enter the main asset master. This I will clearly show you at the time of creating asset master records. Then we have to understand one more concept, depreciation area. Depreciation area means, okay, before that, what are the functions of the asset classes? The asset classes propose the default values for asset master records and depreciation calculation on the assets created under the respective asset class. So at the asset class level, we define some values. Then these values are defaulted to the asset master records. Then the asset class also controls the account determination keys, screen level tools, and the number ranges for asset master records created under the respective asset classes. Right? This I will show you while creating our asset classes. Then we have to understand one more concept: depreciation key. Depreciation area. Depreciation area means it is the area showing the valuation of fixed assets for a particular purpose, such as individual financial statements, balance sheet for tax purpose, management accounting values, etc., etc. Means simply saying, for your understanding purpose, depreciation area means the purpose for which the depreciation is calculated. Say, for example, for the purpose of preparation of financial statements every year or every month, we calculate depreciation. That is called one depreciation area. Then we have, after preparation of financial statements, you have to pay income tax rate on the profits. Now, according to the Income Tax Act, some expenses are disallowed and some allowances will be there. Some reductions or deductions will be there, right? That means, again, you have to recalculate the taxable profits. Say, for example, according to Companies Act, right? We have all the financial statements on a plant and machinery, we have calculated depreciation at 5% using straight line method. But that is not allowed as per the Income Tax Act. According to the Income Tax Act, the depreciation calculated in the plant and machinery is 3% return on value method. According to the Income Tax Act, right, on the plant and machineries, rate of depreciation is 3% and method is return on value method. So after calculating, after preparation of financial statements, again you have to recalculate the depreciation, and again the depreciation is to be accounted, and again you have to recalculate the profits. Means you take the profit displayed in the P&L account, then you add back the depreciation, calculate the 5% straight line method. Now again, you calculate depreciation the same plant and machinery at 3% return on value method. That depreciation only is reduced from the P&L account, right? That gives you a taxable profits. That means again we calculate the depreciation for the purpose of income tax. That is called one depreciation area. Sometimes, if you want to take the capital budgeting decisions, what is capital budgeting decision? Analyzing the revenues from the purchase of assets. Means while purchasing assets, right, you have to take a decision whether you have to purchase this asset or not. For that, we do number of parameters. We consider number of parameters, number of methods are there. Right? So as a part of that, analyzing your capital expenditure, right? Again, we calculate the depreciation on the proposed plant and machinery. That is called management accounting values, and also cost accounting purpose. So in the cost accounting, always we consider, right, the actual number of hours worked by the plant and machinery. Like that, for different purposes, you calculate the depreciation, right? Each such purpose is called depreciation area, nothing else. Clear? Then chart of depreciation. Chart of depreciation is a list of depreciation areas. It is a list of depreciation areas. Each company code is assigned to the one chart of depreciation. It is mandatory. Remember, it is mandatory that every company code should be assigned with one chart of depreciation. Without assigning the chart of depreciation to the company code, right, you cannot calculate, you cannot configure for asset accounting. Compulsory, we have to assign the chart of depreciation to the company code. A chart of depreciation can be used by several company codes, right, provided all the company codes are lying in the same country. Provided all the company codes are lying in the same country. Now, a chart of depreciation and chart of accounts are independent to each other. Then the chart of depreciation is always to be copied from the reference chart of depreciations defaultly delivered with the software. Means here, according to the requirements of almost all the countries in the world, the depreciation charts are already different in the system. In case, right, if you don't find the chart of depreciation you require according to your requirements, then we can create our own. But by copying from one of the system defined charts of depreciations. I will show you how to create your own chart of depreciation. Then depreciation types in SAP. Number one, ordinary depreciation. Right? Ordinary depreciation means the planned distribution of the acquisition cost of an asset over the course of its useful life using a depreciation method. The ordinary depreciation depicts the value reduction caused by the normal wear and tear. Means whatever the depreciation you calculate for the purpose of preparation of financial statements, right, is called ordinary depreciation, nothing else. You write down, you continue the paragraph. The ordinary depreciation is also called. The ordinary depreciation is also called planned depreciation, or book depreciation. Now, number two, special depreciation. It is the depreciation provided for the tax reasons. This is also called tax depreciation. I told you, no, for the income tax purpose, right? Again, we calculate depreciation. That is called another depreciation type in SAP. That is called special tax depreciation. Then unplanned depreciation. The reduction in the value of the asset due to an event whose effect is permanent. See, the reduction in the value of the asset due to an event whose effect is permanent on the asset. That means, say for example, let us assume that we are in the fiscal year 2018, right? So, as on 1st April 2018, the book value of the asset is 1 lakh rupees. The book value of the asset is 1 lakh. Now, unfortunately, a fire accident occurred on 25/7/2018. So because of that fire accident, there was a damage to the plant and machinery, but still the plant and machinery is in usable condition, right? Now, after the fire accident, the management has got the plant and machinery evaluated. So after the fire accident, the revaluation team told that the value of the plant and machinery is 60,000. Before accident, 1 lakh is the value. After fire accident, 60,000 is the value. So what happened to remaining 40,000? That was the loss caused by the fire accident. And the effect of the fire accident is permanent on the asset. In this case, this 40,000 is called unplanned depreciation. Simply, you did not plan for it. So it's unplanned depreciation. Now, while doing the configuration settings, we will see, I will explain number of other concepts, right? So configuration will start tomorrow afresh because I need to go to the hospital for a small this thing, right? This we will see tomorrow. And if you have any questions also, please ask them tomorrow.